ASTS, Luminar Technologies and Warner Bros. Discovery reported their earnings, so let's go over them and see what it means for their respective stocks. Firstly, ASTS reported its earnings on November the 14th. The first 5 commercial Bluebird satellites achieved successful initial operations, and the company filed special temporary authority request with FCC to begin beta service with AT&T and Verizon. They expanded the customer ecosystem, adding 3 new contracts with the US government, and continue to advance discussions with multiple commercial partners. They have a strong balance sheet with $518 million in cash and cash equivalents. And the most important piece of news was that the company announced launch services agreements to enable continuous space-based cellular broadband service coverage for the United States, Europe, Japan, the US government and other strategic markets globally. Yeah, they have launches scheduled during 2025 and 2026 for up to around 60 Block 2 satellites, meaning that they are now well positioned to reach their goal of continuous cellular broadband service. These Block 2 Bluebirds are designed to deliver up to 10 times the bandwidth capacity of the 5 Bluebirds in orbit today, which they'll achieve by being larger and using the AST5000 ASIC chip. This chip will enable peak data transmission speeds up to 120 megabits per second, supporting voice, full data and video applications. As for the actual launch schedule, the first Block 2 satellite, which won't have the new ASIC chip, will be launched in the first half of next year on the LVM-3 rocket of the Indian ISRO. The next 8, for which will have the ASIC chip, will be launched with SpaceX, and the rest will be launched with the New Glenn rocket from Blue Origin, mainly because each rocket will be able to fit 8 satellites instead of just 4 like SpaceX. Now, what happened to the actual stock after this amazing news? Well, it tanked of course, although it seems like it's stabilizing around $24. Still, this news makes ASTS, in my opinion, the safest stock among my riskier positions, while also having the most potential. I'm really considering selling my other risky positions and just going all into ASTS, but the only thing holding me back is that I don't like to buy stocks on which I'm already up. I'm much more comfortable buying stocks while they're falling as my positions go more and more into red. Speaking of red, Luminar Technologies reported its earnings, and well, the company has been selected to be featured as standard equipment on an additional model in the Volvo cars lineup. They have also signed an advanced development contract with a major Japanese automaker, and they have created the first point cloud with the Luminar Halo, which is set to be released in 2026. On top of that, the Volvo EX90 is finally ramping up production, with just 37 cars shipped in September to 362 in October, and hopefully the November sales are also increasing with a similar rate. So this earnings report was generally good, and it seemed like things were finally turning around for the company. As a result, the stock also rose to as high as $1.22 before the split, and my position was up by almost 50%. But as you can see right now, I'm deep in the red. So what happened? Well, despite the good earnings report, which caused the stock to trade above $1 for 4 consecutive days, the momentum was completely stopped with the announcement of the reverse stock split. I honestly don't know why this was necessary and completely disagree with the decision to do it, since the stock was well on track to close above $1 for 10 consecutive trading days, which would prevent the stock from getting delisted from the Nasdaq. After the split was completed with a ratio 1:15, the stock just completely tanked, dropping by almost 18% on Friday. So a simple decision led to my position going from a 50% gain to a 30% loss in a matter of days. Now, in my view, the only sensible reason to do a reverse split would be to do a dilution right after, because they said that they need $100 million to get to profitability. But with the stock tanking by so much, its market cap is now already below $300 million, which would mean a 33% dilution, and that would just completely destroy the share price. I think the stock will just continue to fall until the next earnings report, so the dilution is in my view off the table. And that's why I'm extremely confused as to why would they do a reverse stock split, because if it wasn't for the dilution, they had 180 days to get the share price above $1, while the stock was already gaining momentum. But we can't change the past, we can only plan for the future. So here is my plan. I'm thinking about buying the dip, but only if the market cap drops below $200 million or about 2 weeks before the next earnings report, whichever comes first. But I'll only invest what I'm absolutely prepared to lose, because from the start this investment was a very risky bet. Don't get me wrong, the potential revenue is huge, but if they can get their costs down in time and repay their debts, well, I lose my whole investment. And lastly, Warner Bros. Discovery. The most important piece of news from this earnings report was the subscriber gain. In total, Max delivered 7.2 million net subscriber adds, the strongest quarterly gain since the platform's launch. The company's Q3 revenues were down 3% compared to Q3 2023, but their net income was $0.1 billion, which is a great improvement from the last quarter when the company reported a $10 billion net loss. Unfortunately, their free cash flow decreased, but they still managed to repay $0.9 billion of debt, reducing the outstanding debt to $40.7 billion. As expected, their network segment revenue decreased, but their direct-to-consumer segment continues to increase. All in all, I'd say they didn't report anything out of my own expectations, except for the huge subscriber growth, which is why I've decided to just continue holding this stock, as I still see a ton of potential. My last position that still hasn't reported earnings is Richtech Robotics, so I'm interested to see what they'll report. This stock is mainly a play for mid-2025 and onwards, so I'm not expecting anything special in this report. I will say this though, I'm more inclined to adding to this risky position than to Luminar, but I currently lack the funds to do so. And while my risky positions like Luminar and Richtech are making me losses, these losses are luckily offset with gains from my safe investments like Warner Bros. Discovery and Intel. Having said all that, this is purely for entertainment purposes, as I'm not a financial advisor, and if you want to see more of my content, click on the video just popped up. If you like my content, make sure to subscribe, and thanks for watching.